The price instantly moves into our favor and then boom, it hits colors and so on. And what I usually do is upwards and then boom, right into our... Today I will show you everything that you need to know in order to trade profitably using Fibonacci retracement. For those of you who are very seriously considering day trading as their career path, my trading education is still on big discount, so if you're interested in that, check that link below. And now, without further ado, let's get right into it. So what is a Fibonacci retracement? Well, first of all, it's a great tool to use in day trading. It's a great tool that you can add to your other tools in your arsenal. For example, if you're trading with key market levels or you're trading with indicators or whatever you are doing, you can also add a Fibonacci tool to have even more confluences that the price will go into certain direction. This is how Fibonacci looks like on the chart. So again, depending on trading software, it can have different styles, but basically the main point is that Fibonacci has its levels like 0.5, 0.236 and so on. Fibonacci retracement tool is named after a mathematician, Fibonacci, which used a golden ratio in nature, which is 0.618. Now this golden ratio can be found everywhere in nature, and it's really interesting to see that, for example, there are some interesting stories that this golden ratio was used by ancient Egyptians to build the pyramids and so on, which is exactly 0.618, and it is found all across architecture in different cultures. So many people believe that the markets also obey to the same law of golden ratio, which is 0.618. Now, is it true? Well, it depends. As long as a lot of traders believes in the Fibonacci, it can be really strong, because if institutions or big retail traders trade with Fibonacci, then they will move the market according with it. I personally use Fibonacci in my trading arsenal. I think it's a great tool. It doesn't always work 100%, but it definitely works a lot. So how do you trade with a Fibonacci? Well, first of all, now it's really confusing. To have all these different levels on the charts, it's definitely not necessary, and what you can do is use my preferred settings that I use on the Fibonacci retracement to make it much more simpler and easier to understand. So if you go on Fibonacci retracement settings, this is what you will find. You will find these different levels, you can customize the colors and so on. And what I usually do is remove most of these levels. I remove this level, I leave 0, 1, then I remove these levels, and what I leave is 0, which is a baseline, then I leave the 1, and I leave the only level, which is 0.618, because this is the golden ratio of Fibonacci. So if it is the golden ratio, I don't see any point of keeping these other levels. And this is what we have on the chart. And now let's talk about how you can trade with a Fibonacci. So Fibonacci retracement is called retracement because you are looking for the price to retrace and then open a potential position into the trend. So if you would be in this situation right here, for example, you have the low of the price right here, you have the high, and you know that the price is moving upwards, but you do not know when to enter. So what you can do is take your Fibonacci tool, press it on the low of the price, and then drag it to the high of the price. And here you have the golden ratio where the price could potentially retrace and then move upwards. And this is where you should open a position because it's a reversal point, and then basically you will be profiting from the market moving into the trend. So now you have learned what is Fibonacci, how to trade with it, my preferred settings, and now it's time to see how I trade with Fibonacci retracement. Again, now let's see how does it work in action. So this is the current situation of the price, and again, the first thing that you do is look at the trend. If we draw a trend line, we can see that we definitely have a upwards moving market or a bullish trend. Then when you identified the trend of the market, you can look for a potential entry into the trend. So in this case, because we have a bullish trend, we are interested in buying. But where to enter? We do not have any knowledge when the price will just basically continue in its direction. So what we do is take the swing low of the price. So here we have a swing low of the price, because out of this whole move, this is the lowest point where the price has been. So this is what is called a swing low. And here we have a swing high, because if we take this whole move right here, this is the lowest point and this is the highest point. And we take our Fibonacci tool and we draw it from the bottom to the top if it is an uptrend. If it would be a downtrend, then we would start from a swing high of the price, so the highest point of the price, and drag it to the swing low of the price. Now over here we can see that this is the zone that we are interested in. The price doesn't really have exactly to go to this point for you to entry, but it does have to get close to it, and then you wait for the price to retrace to this golden level, and boom, here we can see that we actually have a great opportunity to entry. Here we identified a trend. Then we also drew Fibonacci from the swing low to the swing high of the price. We have our golden ratio, and as you can see, the price came to this point. Also, it is close to the trend line, so we open a buy position, and let's play the price and see what happens. So let's see what happens, and then boom, the price instantly moves into our favor, and then boom, it hits our full take profit, and we made money using Fibonacci retracement. So the last important point to know is that over here we should have our take profit. So if we are entering at this golden ratio right here, your stop loss should be at least 30 pips, so the price can have some breathing room, and your take profit should be at this point right here. And before we move on, let's also see how does it work in a bearish trend. So the mechanics are pretty similar and the steps are also the same. So first of all, we identify the trend, so we can see that we are definitely in a downtrend, so in a bearish market. Then we look where to draw a Fibonacci and where this price will come to reverse before continuing with a trend. So again, we take this move as a reference point, and we can see that this is the swing high of the price and this is the swing low of the price. So we start right here and then we drag Fibonacci to the lowest point of the swing low. And here we get a golden zone, a golden ratio, where we are interested in selling, because here we are anticipating the price to reverse and to continue with the trend. So over here we get another candle which touched our golden ratio, and that means that now we are interested in selling. So again, remember, always leave some breathing room for the price, so at least 30 pips, and then remember our target should be at a 0 level. And now let's play the price and see what will happen. Boom, so the price went upwards and then boom, right into our take profit. Hopefully you guys enjoyed this episode. If you like videos like this, leave that like button, subscribe, because we do a lot of this in the channel, and check out my other strategy videos to learn even more.